Imagine walking into a bank one fine morning to withdraw the cash you have accumulated over the course of your life. Now you need fund for your child's higher education or for your future security. However, the bank manager quietly tells you, sorry, we're out of cash or we're facing a liquidity crisis. Another prevalent obstacle that various business owners faced a few years ago and still face to some extent is the inability to obtain the letter of credit or LC that prevents you from importing important goods, for example, medicine, food, even raw materials. This creates direct impact on the domestic market, affecting the supply and the demand. Now you must be wondering, what's the reason behind all these obstacles? Today we will answer your questions and look at how political instability causes capital flight in Bangladesh by examining what happened before and after the July Revolution. But first, what is capital flight? In simple terms, it means people and businesses quickly moving their money out of the country to safer places because they fear political or economic instability. Think of it like a sinking ship. When passengers lose confidence, everyone rushes for the lifeboats. In the same way, when confidence in a country drops, money rushes out.
Exactly. And this loss of confidence doesn't come from nowhere. It's deeply tied to political instability. When investors see protests, policy uncertainty, or sudden leadership changes, they immediately demand a higher risk premium, meaning they expect bigger returns to justify keeping money here. But if they don't get that, they move their money abroad. That's when capital flight begins, putting pressure to the taka and depleting Bangladesh's reserves. Now let's go back. According to a 2021 Global Financial Integrity Report, $61.6 billion was smuggled out of Bangladesh from 2005 to 2014. Between 2009 and 2018, Bangladesh experienced an annual average capital flight of approximately $8.27 billion. Over that decade, this amounts to roughly $80 to $90 billion in total illicit and semi-legal outflows. These funds were primarily driven by trade misinvoicing, tax evasion, and illegal cross-border transactions, methods that allow traders, businesses, and individuals to transfer money abroad illicitly. The economy is under stress, with banks having around 10% non-performing loans officially, and some estimates suggest it could be as high as 25%. Capital flight is around $100 billion. Inflation is at about 10.5%, and the Bangladeshi taka has quickly lost value, dropping from 86 to 120 against the US dollar in 2 years. Widespread corruption and red tape make things even harder.
Well, that sounds depressing. But what happened after the July Revolution? The interim government is trying to bring back the money that left the country. For example, foreign agencies have already frozen assets abroad linked to Bangladeshi officials, and discussions are underway to bring back millions more.
According to the Bangladesh Economic Association, even catching a tiny fraction, less than 1% of the laundered money, is like finding a stray cat sneaking into the house. Really? If we manage to recover just that little bit, it could add taka 15,000 crore to the economy. Imagine the pouring happiness that would bring. This highlights just how serious the issue of illegal capital flight is in Bangladesh. Much like a mischievous cat causing chaos, but just eager to get back.
Because at the end of the day, money goes where trust lives. If people believe that their savings are safe, they will keep investing at home. But if the trust is broken, no amount of reserve can hold the line. That's all from us. But the question remains, can Bangladesh rebuild the trust?